The majority of us are trained that the greatest method to safeguard our financial future is to save money in a bank. But what if that tactic isn't as clever or safe as it first appears to be? What if the money you have in the bank is actually depreciating? You need better options in the uncertain world of today to safeguard and increase your wealth. What then is the remedy? We'll look at 6 assets in this video that are safer and superior to cash. Follow along as we dissect each of these choices and demonstrate how to make your money work for you. Everyone wants to think that storing their money in a bank will keep it safe. However, a lot of individuals are unaware of the fact that holding sizable sums of cash in the bank exposes your funds to unknown threats. It's time to look beyond your bank account, as inflation is slowly decreasing the value of your cash, and there is constant uncertainty about the state of the global economy. Thus, how can you make sure that your finances are secure and expanding? We're going to examine 6 assets today that have shown to be more reliable and secure than cash. These investments offer stability, appreciation, and occasionally even passive income, enabling you to build wealth for the future while safeguarding your hard-earned cash. This video is for anyone, whether you're just starting your financial journey or you're an experienced investor looking to diversify. Let's break it down. 1. Real estate, turning property into profit. Real estate naturally ranks first on our list of assets. For individuals who want to protect their money, real estate has always been one of the most dependable investment options. Real estate usually appreciates over time, unlike cash, which loses value due to inflation. This makes real estate a great hedge against inflation and economic downturns. Real estate can take many different forms, such as land with development possibilities or residential or commercial buildings. Proper location and market research are essential for profitable real estate investing. In addition to the property's worth rising with time, you can earn a consistent income through rent by purchasing in a growing neighborhood or selecting rental properties that are in high demand. For instance, historically, the average yearly growth rate of real estate prices in large cities has been between 3 and 5%. In certain instances, cities undergoing population booms have even greater appreciation for that. 2. Precious metals. Gold and silver, the ultimate safe havens. Precious metals, more especially gold and silver, are the next items on our list. These metals have been prized for ages due to their beauty as well as their stability in volatile economic times. Individuals frequently look to gold and silver as safe haven investments when inflation spikes or the market crashes. Why do these metals work so well to protect wealth? Their intrinsic value and limited quantity provide the answer. The supply of gold and silver is limited, in contrast to fiat currency, which governments can produce whenever they like. They are valued because they are scarce, particularly in hard times when paper money can depreciate quickly. For instance, gold prices shot up during the 2008 financial crisis as investors fled crumbling markets. Similar to this, in 2020, as the world economy was threatened by a pandemic, the price of gold surged. 3. Stocks ownership in companies that create value. It's common for people to associate stocks with wealth creation. Even while stocks appear riskier than cash, cash cannot compare to the amazing long-term gain potential that equities provide. Investing in firms that provide goods, services, and innovations that impact our world is represented by stocks. Purchasing stock is similar to purchasing a portion of a business. Your investment grows and makes money along with the company. Long-term performance of equities has surpassed that of many other asset classes, such as bonds and real estate. 4. Bonds, the safe bet for steady returns. Bonds are a viable option to explore if you're searching for an asset that performs better than cash but provides greater stability than equities. In essence, bonds are loans that you make to corporations, governments, or municipalities in exchange for periodic interest payments from them. Bonds are thought to be safer than equities in part because they provide a steady income source. The issuer of a bond promises to pay you interest on your investment at regular intervals, usually semi-annually or yearly. The issuer reimburses your initial investment at the conclusion of the bond's tenure. One of the safest investment options is thought to be government bonds, especially those issued by reputable governments like the U.S. Treasury. 5. Cryptocurrencies, the digital revolution in finance. Cryptocurrencies are a daring substitute for conventional money as we usher in a new era of technology and finance. Digital assets that are decentralized and uncontrolled by a central bank or government include Bitcoin and Ethereum. They provide special advantages that are unmatched by cash or even conventional investments. The possibility of large returns from cryptocurrency investments is one of the strongest arguments in favor of doing so. The price of a Bitcoin coin has increased from a few cents to tens of thousands of dollars during the last 10 years. Although there has been volatility along with this tremendous rise, many cryptocurrencies have had an upward long-term trajectory. The capacity of cryptocurrencies to act as a hedge against inflation is yet another significant benefit. Many cryptocurrencies have a restricted supply, in contrast to conventional currencies, which governments can produce whenever they want. For example, the total number of Bitcoins in circulation will never exceed 21 million. Prices may eventually rise as a result of this scarcity and rising demand, making them an excellent means of storing wealth. Additionally, because cryptocurrencies are decentralized and transnational, they are not linked to any one nation or economic system. They benefit from this during periods of geopolitical unrest or currency depreciation. For instance, some people have resorted to Bitcoin in hyperinflationary nations to save their wealth against depreciation. 6. Art and collectibles. Investing in rare and valuable treasures. Even though they can appear unorthodox, investments in art and collectibles can be very profitable. Fine art, uncommon antiques, vintage wines, and classic cars are just a few examples of possessions whose value has increased over time, sometimes much beyond that of more conventional investments. In reality, some of the richest people on the planet devote a percentage of their portfolios to fine art and antiques. At auction, works of art by well-known artists like Picasso and Van Gogh have brought in tens of millions of dollars. However, investing in art does not require you to be a billionaire. Selecting intelligently might yield substantial growth potential when it comes to emerging artists or undervalued works. This also includes collectibles such as rare coins, stamps, and even old sports memorabilia. As these objects become more rare or significant in culture, their value may rise. The secret is to conduct thorough study and make investments in things that have historical or long-term value. Investing in art and collectibles is not just about financial returns. It's about passion and the enjoyment of owning something rare and beautiful. And unlike cash, which can depreciate over time, these treasures have the potential to grow in value, making them a worthwhile addition to your investment strategy. Why keeping cash isn't enough? After looking at these 6 effective cash substitutes, it's critical to comprehend why holding cash in the bank is no longer a wise long-term move. Despite its seeming safety, cash is vulnerable to inflation. Your money's purchase value progressively decreases due to inflation, the quiet enemy of prosperity. Even if your savings are collecting interest in a bank account, inflation frequently outpaces those gains. Cash is one of the least efficient ways to conserve wealth because it loses value over time. Moreover, banks themselves bear some risk during economic downturns. This has been demonstrated in previous financial crises when banks have failed, blocked withdrawals, or even needed government bailouts. What will happen to you next? It's time to diversify into these assets and take charge of your financial destiny. The most crucial step is to start, regardless of how big or tiny you want to go. Invest wisely, accumulate wealth, and make sure your security never stops. If you found this video helpful, be sure to hit the like button, subscribe to the channel, and click the notification bell so you never miss another financial tip. Thank you for watching, and we'll see you in the next video.